Welcome back, Paul Gerard from Price Accounting Services again in our series on structures. In this episode we're going to talk about sole traders. Now, sole traders are the most fundamental and basic form of structure, if you want to think of it that way. That's where an individual such as Paul Gerard goes out and establishes a business, and all the profit is mine and any money I lose is mine, and if anybody sues me I get sued, nobody else. My wife sits aside and says, "Weren't you foolish?" So, sole traders can be a very straightforward and simple way of operating a business, but it's not that simple. As a sole trader, yes, you've got a tax file number, but you may need an Australian business number. You may also need, well, you must also register for a business name if you're going to use any name other than your own. So, for example, if I wanted to establish Paul Gerard Accounting Services, I can't do that unless I register the business name. And that's done through ASIC, the Australian Securities Investments Commission. ASIC will also, when you go to explore that information, explain that you can also have a company that owns a business name, or a company can be the business name. So, for example, we could register a company called Paul Gerard Accounting Services Proprietary Limited, and it would then own that name, and Paul Gerard Accounting Services, operated by me, can't exist because the company's got that trading name. However, the company could give me permission. So it gets a little complex, but the idea is you want to have the right to the intellectual property. You can't just go out and trade in your own name other than your sole individual human name. You can do that, but as soon as you change it in any way, add any extra words, you must have a registered business name. Okay, sole traders. The biggest weakness to a sole trader can be the fact that you can be personally sued. The issue will be you will never have workers' compensation insurance. And even if you did get a workers' compensation policy, it will only insure an employee of the sole trader. So, for example, I engage my wife, I employ my wife to, I don't know, do some tax and accounting work, which she wouldn't have a clue about, but let's say I did. If I did that, I'd have to pay her, and I'm required by law to register for workers' comp. She has a workplace accident at the same time as me. I'm uninsured because I'm a sole trader, she's insured, so it's a bit of a weakness there. Other key factor is I can be sued. So I might need to have the right insurances to ensure that in the event I'm sued, I'm protected. However, in most cases, insurers will not insure certain acts for an individual, or will heavily limit the type of insurance that can be given. So we often encourage other structures. A sole trader can be a good structure for an initial startup, just until you ensure that it's viable and things like that, and then you migrate to some other form of structure. So I hope that helps explain a bit about sole traders. One other thing, just while I'm mentioning it, I thought I'd explain, we often get inquiries from clients and they say, I want to set myself up as a company. And they say, I've got an ABN. I went and registered myself as an ABN. That means I'm a company. That's really not correct. You're a sole trader. So there's a warning. If you've gone out and got an ABN in your own name, you do need to be thinking about your structure and thinking whether it's the appropriate vehicle for you to maintain on a long-term basis because of the risks and issues that we've discussed. See you again soon, and follow a series about structures and you'll learn a bit more about some other structures. Cheers.